Well, good day, traders. And yesterday we spoke about the upcoming speech from John Williams, the New York Fed president, one of the core voting members of the Federal Reserve, potentially for that to be a volatility event. And part of the reason we do these videos is to acknowledge various events which could be a risk to exposures. And it was. And I think ultimately what we heard from John Williams was a punchy speech. And certainly most people were not expecting it to be as dovish as it sounded. And what we saw after that was bit of a mess up, to be honest, and I think certainly people have lost money. People have allocated capital to the idea that John Williams, one of the core members of the Fed, really gave off the impression that a 50 basis point cut was coming through, with the rates market going from some 33% chance of a 50 basis point cut to down to a 66% chance that we were going to see a rate cut of 50 basis points in the July meeting. Certainly if you see that situation and people put money to work, people were selling dollars, people were buying gold, people were buying stocks in that situation, that we were going to get this more aggressive response. Then suddenly in the start end of the Asian session, you see this rebuttal from the broader New York Fed, who came out with a statement that John Williams' comments had been misinterpreted by the market and effectively they weren't supposed to be a sort of cat out the bag situation where he was detailing a view on monetary policy and was more an academic view. And people have part revised those situations. So if you're a fund and you've put money to work expressing that view, in fact we saw economists like Citigroup coming out and changing their call based on his comments from 25 to 50 basis points, then certainly you'd say this is a misstep from the Federal Reserve, a miscommunication. They know exactly how markets interpret every word that these guys say. They hang off every word. They know how much emphasis the Federal Reserve put on policy guidance as a policy tool in itself. And so therefore the fact that the Fed have had to walk back his comments is certainly one would consider that a misstep. But I think it's really interesting if we do have a look at how Asia's reacted to the New York Fed coming out and saying that his comments were actually more an academic view than anything else. And if you have a look at our calls today, you can see Asian markets are strong. You know, you've got the ASX 200 pushing 6,700. If you actually look into the internals there, you can see 69% of stocks are higher on the day. We've actually got the financials really doing quite nicely. They're at 1.1%. They're putting quite a few points into the index. And mining stocks, materials, up 0.9%. We haven't got that on this chart that you can see here, but copper price up 1.8%. We can actually see that the oil prices are moving up. You've got WTI oil up 56 at 13, up at 83 cents on the day. Brent price is up about 2% or so. You can see that iron ore futures have started moving up through Asia as well, and I think that's been a really interesting situation. Okay, gold's down $3 on the session, but we're still trading 14.42. It's found some support around 14.40. It looks like it might want to make another tilt back at 14.50, but we'll have to see how that plays through as we go through Europe and into US trade. The equity markets, as I say, very strong at the moment. You've got the Japanese market up 378 points or so. The Chinese market's moving higher as well, and that's really put a bid into our opening calls. As you can see, we've got the Germany 30 up 88 points. You've got the UK market doing quite nicely, and you've got the US stocks finding buyers through the session as well. We've got S&P futures up 0.4% as I speak, and that's allowed the cash markets to look for a favourable outcome. And we can see that the S&P looks like if it was to open right here, right now, would open back above the 3,000 level. So it's interesting that the New York Fed have walked back this situation, but the markets are saying that perhaps that this has let the cat out the bag, and it also incentivises the ECB to be more aggressive at next week's ECB meeting. If the Fed are actually going to go 50 basis points, which is a big if, of course, then it allows incentivises the ECB to try and control the euro to an extent and actually be more aggressive at next Thursday's meeting. So certainly if you look at the rates market, we're pricing about a 52% chance that the ECB next week cut its deposit rate to negative 50 basis points. So definitely an event risk for you to watch out for next week. If you look in FX markets, then really fairly limited moves compared to what we've been seeing in commodities and what we've been seeing in equity markets there. But we are starting to see a little bit of dollar selling coming back in after that earlier pop from what the New York Fed said. But I'm specifically looking at the crosses. We're starting to see a bit of love now for the Aussie dollar. Euro Aussie shorts, I think, are looking pretty good at the moment. There's been a lot of technical selling coming through, and I think people position for much lower levels. Have a look at the head and shoulders pattern that you can see there. I think that looks one that people are getting a lot of attention to. So have a good weekend, everyone, and certainly we hope to see you back next week.